After the Swiss franc plunged on Monday, the Swissy has steadied, and we can now take a more in-depth and long-term look at the 120 floor for the Euro Swiss franc. Stephen Gallo from Schneider FX joins me from London. First of all, Stephen, how did the SNB come up with this level of 120, as even in their statement they said this overvalues the franc still?
If I had to take an educated guess, even though I hate that term, but if I had to take an educated guess, I would suspect that 120 was chosen instead of 130 because of the fact that the SNB are going to have to maintain this floor that they've announced. A floor of 130 in Euro Swiss, while that might have triggered a more substantial, obviously it would have triggered a more substantial devaluation of the franc, but 130 might have been more difficult for the SNB to maintain, simply because there doesn't seem to be any material let-up in the euro area sovereign debt crisis in sight, and so there is going to be constant pressure on the franc to appreciate.
So essentially, do you think that the floor is a good idea?
I think it will probably work. I think the idea of a floor will work because the SNB, like all central banks, have unlimited firepower. I think it will essentially, they'll be able to do whatever they need to prevent the franc from strengthening below 120 in Euro Swiss. However, is it sustainable? And that's more in line with your question. Is the floor sustainable? And really, the answer to that question is it is sustainable as long as the francs that are being created to force or cause a weakening of the franc or support the floor are not causing imbalances within the Swiss economy to widen further. Swiss has an issue right now, I think, with asset prices, perhaps also with bank lending. So this liquidity that's feeding into the banking system vis-a-vis these interventions, which we may see, could cause more imbalances within the economy. And then obviously, if the level of inflation in Switzerland, if headline inflation in Switzerland increases from the current levels, well, then from a monetary policy perspective, there may be an enormous contradiction there, because if the SNB is trying to maintain price stability, if they're trying to target 2% inflation, and we get into an environment where inflation pressures are higher than 2%, but we still really don't see any significant let-up in the market's desire to buy Swiss francs or to own Swiss francs, they may have to create Swiss francs in an environment of too high or unwanted inflation, and that would mean that the floor is unsustainable. So that, I think, is the answer to the question. It's sustainable only up until a point.
But if we do get another recession, surely investors will again look towards the franc. So how sustainable is it in the long term? The
SNB will be forced to maintain the floor. They'll be forced to hold up to it, because a double dip in the developed world or a further deterioration of the sovereign debt crisis in Europe may not necessarily deter people from wanting to hold Swiss francs. I mean, we've already seen the SNB usher us into a period of negative interest rates, negative nominal interest rates in Switzerland. So and still we see this buoyancy in the franc. And so what that tells you is that even though there is actually, in some cases, there has been a charge, a penalty for holding Swiss francs, market participants and investors are still willing to pay that fee or to pay that cost, because they desire liquidity and safety of principal over return in this environment. And so if we head into an environment, so that environment increases, in other words, investors and market participants are still desiring liquidity and safety of principal over return, there will be more pressure on the SNB to do something. So it's possible that there will be pressure on Euro Swiss to move below 120, and they would have to act based on this floor that they've now announced.
A lot of attention is now being paid to Scandinavian currencies because of their strong fundamentals and interest rates. Are you expecting a strong appreciation of the Norwegian and Swedish currencies?
It's possible that we could. It's certainly not impossible. Now that the SNB has essentially shut off the valve towards, or at least closed substantially the valve towards the Swiss franc, the other valves still remain open, and there are other safe havens out there. The one question we need to ask, though, is, are these markets liquid enough to support the type of demand which would navigate away from the Swiss franc? And I think the answer to that question is no, not necessarily. necessarily. I think, the market for the Swiss franc is obviously a much less liquid market already than, for instance, the euro or even sterling or certainly the dollar. And then when you move to a lower tier, even than the Swiss franc, on the level of the Swedish krona or the Norwegian krona, you're talking about even less liquid markets with even less depth. But that actually could create more problems for the authorities in those countries, because even though the markets are less liquid, any incipient demand in those markets or any marginal demand in those markets for those currencies could actually tend to push prices up further because the market is less liquid. And that could create more complications for policymakers in those countries who are already worried about their currencies being too strong versus their largest trading partner, which in both cases of Sweden and Norway is the Eurozone. So I think what the net takeaway of this all is that the euro is continuing, the existence of the euro is continuing to cause more problems for the remaining floating exchange rate regimes in Europe. And so there is not only a short-term question here, in other words, what do authorities do if their currency faces significant upward pressure, which causes, some kind of disequilibrium to occur. But there's also a longer-term question here as well. What do these countries with floating exchange rates do, assuming that the euro survives? And for the most part, we suspect that the probability of the euro not being here in 5 years is still relatively low. So assuming that the Eurozone survives, what do these countries that still have floating exchange rates do? I mean, they may constantly be forced with moves in their exchange rates which are undesirable. So there are a couple of questions here that need to be answered. They're very important questions. One is a short-term question, and another one is a more longer-term question.
Stephen Gallo there, one of the most recognisable commentators in the financial media, and now here once again on Dukascopy TV. Goodbye for now.